Well, good morning then everyone, as we head into European trade on Tuesday, the 24th of September. A couple of things to talk about. As we head into European trade. Really the main, we got the RBA. We do also have China as well. You've got, you see the RBA holds key rate at 12-year high, defying global easing. We'll go back to that in a minute. But China unleashing stimulus package to revive economy and financial markets. Couple of measures. They've cut they've cut the interest rate in China. They've cut that by a decent amount. They have also reduced the amount of reserve requirements that banks throughout the country are required to have. So lower interest rates and telling banks there to loan more money out into the economy. Obviously that is big support measures. They've announced it's 800 billion yuan, $113 billion support for the equity market. So different types of measures as well. There's a pretty broad package of stimulus measures. I'm not going to go through every single one, but the main ones are cut to the key interest rate, reducing the reserve requirements of commercial banks, and 113 billion US dollars of support for the equity market. So massive stimulus measures. It's the first time actually in history that they've cut the interest rate and reduced the amount of reserves banks need to have in on the same day, in the same pack of measures. So normally they do one or the other, but obviously Chinese economy has been struggling for a while, and they're taking big steps today to go and try and address that. You can see over here, if I jump over to the China stock index, you fire that up, you see that's your 1 hour chart. Let's see if you go to whatever other hour chart you want. It's a pretty sizable gain so far. Daily chart, obviously it's a pretty big jump. You'd probably expect that to continue with the measures that they've taken. Doesn't look like something that much out of the ordinary on a weekly time frame, but it is only 10 to 8 on a Tuesday morning, so still a little bit of time this week for that weekly candlestick to continue on its way. But super positive developments for China, certainly initially. Whether that ends up resolving the issues in the economy is another thing. We're kind of heading towards a bit of a global economic slowdown. Are they doing these measures at the right or the wrong time? I guess only time will tell, but certainly in the near term, positive for Chinese equities and Chinese related assets, which really is the Australian dollar. And the RBA holds their interest rate at 12-year high, defying global easing. Board restates it's not ruling anything in or out on rates, but an interesting comment from me was the RBA used the word sustainably. Used the word sustainably 4 times in the statement to hammer the point and near-term declines in inflation won't be enough to convince them to cut rates. Now, we do have this tomorrow, a monthly CPI indicator, and for the first time since August of 2021, that is due to be below 3%, right? Sustainably below 3% is not one data print being below 3%, so we're going to need to see it, as they have said multiple times within their statement. We need to see it sustainably below 3%, and you can't really have something sustainably below 3% until you have at least a few months of it being below 3%. So kind of a 50-50 chance, or kind of swap traders are pricing in a 50-50 chance of an interest rate cut in the December meeting. Obviously that's a couple of months off as of kind of 2.5 months off, and then most economists think that you'll get a cut in February of next year. Either way, I'm not going to get an interest rate cut for the next few months, and you got countries like the US looking at another 50 basis point cut at their next meeting. There's rumours of another 50 basis point cut at the next meeting, not being ruled out by any Fed officials anyway. You got the ECB. Remember that all that data yesterday was absolutely dreadful out of the eurozone. We do get these business climate figures today out of Germany. We got these consumer confidence figures out of Germany on Thursday. So economic data from Germany. We will look at inflation out of France, Spain, GDP and inflation, labour market figures out of Germany, economic sentiment figures all out on Friday. So that's definitely something we'll have to keep an eye on in European data this week if that continues to weaken. As I said yesterday, short Euro Aussie becomes a good trade, and also short Euro Sterling, although that has got fairly hammered in yesterday's session. But the fact that they need to see this sustainably below And for the Australian dollar's point of view, they need to see this sustainably below, or inflation sustainably below 3%. You need a few months of it being below 3% for it to be sustainably below 3%. You got massive stimulus measures from China. I would also say massive stimulus measures from the US. If they cut by 50 basis points 2 times in a row, that is massive stimulus measures. Whatever way you try and spin it. I mean, it's probably not looked at as stimulus as such, but ultimately it's stimulus when the markets are down. Why is it not stimulus when the markets is up? That's kind of how I think of it. And yeah, I mean, how is that anything other than bullish for the Australian dollar? I'm not quite sure. If you look at the chart, it hasn't really been reflected yet, but maybe that's a good thing for us, right? It hasn't just gone straight higher. Maybe a bit of a dip to buy back into. Ideally, get a bit more of a dip, but I think buying the Australian dollar at market is not the worst idea in the world. You can get long on any dip. I think that's worth a punt. Now, I mean, whether you want to play that against the US dollar is obviously up to you. I still do think the Aussie goes higher, but maybe short euro Aussie this week might be a better or that may be a better option just for now. Aussie yen, long Aussie yen's another option, with dollar yen's trending higher. Reluctance to hike interest rates again from the Bank of Japan. Euro Aussie short, Aussie yen long, probably your best bets when it comes to the Australian dollar. Whereas my Aussie yen chart, it's kind of grinding its way higher, not moving higher at any sort of an aggressive pace, but it is grinding its way higher. It is making higher lows and higher highs. Again, if you can get long, that's some stop loss maybe below 98, but definitely worth a punt. Gold continued its move higher yesterday and then overnight as well. What we were looking at in yesterday's session, bit of downside, 6 a.m. this morning. Not too much really to see there in today's session so far, but Australian dollar, euro have to be a main focus of attention this week. Short euro Aussie, long Aussie yen. Equity still not doing too much at this point in time, although Chinese stimulus measures, massive Chinese stimulus measures, probably positive for the broader equity complex, with $113 billion being pumped into Chinese stocks. Obviously China being the world's second largest economy. If China does well, the world can do well after that as well. So big interest rate cuts from the US, massive stimulus measures from China. Surely that's bullish for risk, isn't it? Yeah, I mean, just thinking about how's anything other than bullish for risk. Certainly in the short term, if it doesn't manage to fix things, it's probably definitely an extremely bad thing. But certainly for now, gotta be bullish risk, I think, off the developments overnight. So which then further compounds Aussie long. So bullish risk, short euro, long Aussie, and I'm going to stick to my long sterling bias that I've had for a few weeks. So that is my thoughts on markets this morning, heading into the European Open. A lot to digest, a lot to take in. Let's see if you guys can make some money.